Hello, ladies and gentlemen. Greg Mikulowski from ForexLive.com as we head toward the end of the U.S. trading day and look toward the Far East trading day or the Asian Pacific trading session. I thought I'd take a look at the three major currency pairs, the dollar versus yen, the Aussie versus U.S. dollar, and the New Zealand versus U.S. dollar, and what the technicals are saying for each of those currency pairs. So let's get started. We saw the dollar versus yen. This is the 4-hour chart, by the way. We've seen the dollar versus yen move sharply to the downside in trading here today. The price yesterday held against the 200-bar moving average on the 4-hour chart, and also the low price that we saw in last week's trading right here near the 149.15-16 level. And then in trading here today, the price fell below that level and continued its decline unabated really until the price moved below the low price going back to early February near the 147.62 level, moved just below that level, and then started to trade above and below the 100-day moving average. That's the blue line in this chart right here. The last few hours of trading have seen the price, or at least 4 or 5 hours of trading in the New York session, saw the price rebound back to the upside here, getting its momentum from the inability to stay below the 100-day moving average of 147.81. So as we head into the new trading day, that 100-day moving average is going to be the barometer for more bullish above it, in the short term, more bearish below. But at the same time, I would expect to see some selling pressures, let's say in this swing area right through here. This area does go back in time, going back to areas way back here, going back to September, October, November, December, before the market finally decided to push to the downside. So that level was broken in trading today, and that will be close resistance. And I expect sellers to lean against that on any sort of move to the upside. And but if we don't get up to that level, breaking below the 100-day moving average should be an easy hurdle to we will see, but we'll keep that level in mind as a barometer in the new trading day. Let's take a look at the Aussie versus US dollar next, and if we take a look at the 4-hour chart for this currency pair, the price has, like the dollar versus yen, based against a moving average level in trading here today. In particular, well, it's actually two moving averages. One, the 100-day moving average, that's this rising blue line right here, and two is this green line, which represents the 200-day moving average. Is more flat than the 100-day moving average. But both those levels were convergent in trading yesterday. We moved above those levels right through here and stayed above them on the correcting into the early Asian session. And since then, the price has stepped higher and higher and higher until we reach this high swing area. Swing area is defined going all the way back to early December, where we had these different swing highs through here, broke through it and moved it to the highs. We returned back to that level right through here, traded above and below it for a few 4-hour bars through here before moving to the downside, and then started to use this area as resistance through here, as ceiling resistance that found willing sellers in this area on a number of different times before moving again to the downside. It wasn't until today that the price moved to that level and went up and tested that. In fact, the high of that swing area was 0.66239. The price currently trades between those the low and the high of the swing area at 0.6612 and 0.66239. The good news is we're also above the 38.2% retracement of this move to the downside. So that's always good news to get and stay above that level. So traders who are looking for more upside here have two things to watch. One is we want to stay above the 38.2% retracement. That shows that the buyers are more engaged, want to push the price higher. Two, get above the high of this swing area and stay above that level, in which case we'll look toward the 0.664 level and then toward the 50% retracement at 0.6656. So that's what I'm going to be looking for in the new trading day for the Aussie versus US dollar. Finally, let's take a look at the New Zealand versus US dollar on the 4-hour chart. And what we see on this currency pair is, again, a move to the upside. And once again, the price at the low today based against a moving average level. This time, the moving average was the 100-bar moving average on the 4-hour chart. We had moved above both the 200 and 100-bar yesterday and then stayed above it right through here. And you can see how the price then started its rotation to the upside, trending higher and higher, getting above this swing area through here between 0.6148 and 0.6159. Also moved above the 38.2% retracement of this last move to the downside. That is something I always like to look for. We had been above that level right through here, but this time we did break above it, and we're trying to stay above it in trading. That's going to be the barometer for the new trading day. As long as we can stay above the 38.2% retracement, the bias remains to the upside for this currency pair. And if we get above the 0.6173 level, it opens the door for a move toward the 50% retracement of the same move to the downside. That level comes in at 0.62028. Above that, and we'll look toward this swing area up here between 0.6218 and 0.6228. On the downside, if we break below the 38.2% retracement, some traders may look to this swing area as the risk-defining level down to 0.6147. But if we move below that level, then we have to have the 100 and 200 bar moving averages and the 100-day moving average. All those three levels needed to be broken to the upside to increase the bullish bias this week, and indeed they did, with the price moving above all three yesterday and then holding support against the high of them in trading here today. So that's my technical view of the three Asian Pacific currencies, major Asia Pacific currencies going into the new trading day. My name is Greg Michalowski. Good fortune with your trading. Bye-bye now.